This is In the Money with Angela Miles.
I have a big show for you today. Hello everybody, I'm Angela Miles. Thanks so much for clicking on. First of all, the Dow just crossed 13,000 as we've been doing my show. We'll talk about that with the trader, but really traders are saying it's a psychological number. It's not that big of a deal to them, just something that everybody's watching. Oil is another topic that's really hot right now. Those oil futures have been surging. Interestingly enough, some of the ETFs or things like USO, the volatility is actually coming down. USO's volatility was around a 33 earlier this week. It's all the way down to a 28. Isn't that fascinating that the vol would come down as oil prices are going up? You would think that there'd be a lot of risk to this stock, or the ETF rather. But right now it looks like because the options premiums are low, a lot of people want to own options contracts because the prices are inexpensive. But right now they're buying the February 42 calls. Those are in the weeklies that expire today. In March for the standards, they want the 42 calls as well. But again, it's the volatility that's a big story in USO right now. Sears Holdings, talk about a hot stock yesterday. This thing was running wild. By the way, this stock is up about 50% in just the past month or so. Now we're hearing reports that the company is revamping its business plan and maybe spinning off some smaller Sears stores. Well, the Feb 62 weekly calls are very active on this one. There are a lot of put buyers only because this stock is tough to borrow. So instead of shorting this stock, they're buying the puts instead. It's just a synthetic play there. So they're buying the 60 puts on Sears. In March for the traditionals, they want the 50 puts. Gap, good news, bad news on this one as far as the earnings report. Right now the stock is trading about $22. The March 20, 21, and 22 puts are very active. It smells like a spread to me. As far as June, a lot of light activity there. In September, not much happening. It's a near-term play for traders. Priceline comes out with earnings on Monday. The stock is trading near its high at $593. Doesn't hurt that the market's going up today for that stock. The Feb 605 calls are active, as are the 600 calls. Those expire today. As far as the March weeklies for next Friday, they seem to want the 610s. The volatility is up there. It's at a 77. Hold on. We're going to talk about Salesforce, another big gun in the market after this break. All right, Andrew Keene of KeeneOnTheMarket.com joins us now. 13,000 in the Dow. What does it mean to you?
Well, it means a lot to me. It means a lot to me. No, I mean, I've been bullish for such a long time, and now we have to find a catalyst. If I want to be bullish or if I want to be bearish, I have to find a catalyst going forward. And right now, I don't really see a catalyst either way. The fact of the matter is the market wants to go up. And I've been talking this since 1200. There's a perma bid in the stock market. However, if you look forward, what's a catalyst to make it's going to go higher? I've been flagging this 1372.75, 1373, which is the Bin Laden high. So we're close to that number, and then I think we can get through there and get up to 1440, which is my year-end target. Earnings have been good for the most part. We've seen 70% beat on earnings.
Yeah,
earnings have been strong.
They have. Let's talk about Salesforce, because this company's in cloud computing. That's a big arena, and I know a lot of traders are really focused on this stock.
Yeah, I had 3 earnings plays for yesterday or today, and they're very, very complicated. So I'll try to explain them very easily.
Well, let's break them down. Let's just do Salesforce.
Okay, right Salesforce was trading 132. The at-the-money strata was around $11. So I thought it would move around $11. I didn't think it'd move a lot more than $11. What I did is I bought the March 120, 140 strangle. I bought the March 120 puts, and I bought the March 140 calls. And to navigate some of my costs, I sold the weekly 120 puts and 140 calls. So this is called a strangle swap. Back when in the floor, we used to call this a strangle swap. So I traded this for, I bought it for $2.69. I put it in the order book. There's a book you can put all the spreads. Great way to trade. I put a lot of spreads in the book. So my goal was to have Salesforce be at 120 or 140 would be my maximum profit. This morning, Salesforce got up to about 148. Has been selling off. It's down to 143, and I got out of half of my spread so far at around $3.35. Paid $2.69, so a small profit on that one. It moved a little bit more than I wanted to. I still have half position on today.
All right, and what's your next big play that you still have on the table here?
In Deckers, I thought Deckers was overbought. It looked like a 92.5. It wouldn't get through that level, so I sold the March 92.5, 95 call spread. That's a much easier one. It can be worth $250. I sold it for $105. I was risking $145 to make $105. Deckers is down 10 bucks. The spread hopefully will go out worthless. It's still worth about 15 cents somehow, I don't know. But that was a good trade. I was short, but I was capping my losses in that one.
All right, and another stack you said 3.
Okay, Gap.
Oh, okay.
I had one in Gap. Gap had a very similar chart to Dell. I played Dell on earnings, and Gap looked like it was overbought, and it was grinding higher, just like Dell was, into the earnings. It was up like 7 straight days. I thought it'd pull back a little bit. I didn't know how much it would pull back. I thought maybe 21.5, 22. So in Gap, in March, I sold the 24.25 call spread, and I also sold the 21.22 put spread. So I did that for 48 cents. Like I said, I put these in the spread book. I put a lot of orders in the spread book throughout the day. Like I put the order in the book, and I didn't get filled for a couple hours. But I was happy to get filled if I got filled. So I was risking $52 on a one lot to make $48, and I just need Gap to basically be between 21.5 and 24.5. By March expiration. It's worth about 32 cents today. I have an order in the book.
Yeah.
I'm 30 bid for this thing right now. If I can take a 33% profit in one day, I will take it off and move on. What I do with earnings a lot, for me it's a one-day play. It's a one-day bet. So I make a bet on what I think the direction is going to do. If I make money, I take it off. If I lose money, then I take it off as well. You know, a lot of these with the weeklies nowadays, that's why I love playing earnings nowadays. Back in the day, you know, we said when I was trading Apple, if you wanted to play Apple earnings, you had to play March.
Yeah,
well, now we have weeklies,
forever.
so you can play the weeklies, and it's a one-day bet for me. I take it off, I move on to the next trade.
Thank you. We're going to move on with our day. Thanks so much. It was terrific talking to you. You had a lot of good information today. Andrew Keene of KeeneOnTheMarket.com, and that's a wrap from me. I'm Angela Miles, wishing you a wonderful weekend.